What if becoming wealthy wasn't just about money, but also about mastering yourself, your thinking, and your emotions? Richer, Wiser, Happier by William Green dives deep into the minds of the world's greatest investors and uncovers timeless lessons not just about investing, but about how to live a better life. Green spent 25 years interviewing legends like Charlie Munger, Howard Marks, Sir John Templeton, Joel Greenblatt, and many more. In this summary, we'll walk through the most powerful insights from these titans, structured in a way that helps you apply them not only to your finances, but to your mindset, career, and personal growth. Part 1. The Inner Game of Investing. Green opens the book with a simple truth. Investing greatness isn't just about IQ or spreadsheets. It's about temperament. Temperament over intelligence. Great investors aren't necessarily the smartest. They're the calmest. Bill Miller once said, "In order to win, you need to not just tolerate discomfort, you need to seek it." The best investors are patient, disciplined, and emotionally resilient. They're masters of delayed gratification and self-control. Self-knowledge is power. Sir John Templeton would often ask, "Am I acting rationally or emotionally?" Knowing your own emotional triggers and biases is essential. If you don't understand your own weaknesses, the market will exploit them. Mastering fear and greed. Howard Marks teaches that most people zig when they should zag. Fear drives people to sell low. Greed pushes them to buy high. The great investors train themselves to act opposite the crowd, to buy when others are panicking and sell when others are euphoric. Part 2. Mental Models of the Greats. Green breaks down how elite investors think differently. They don't just look at numbers, they use mental models to frame the world. Charlie Munger's lattice work of mental models. Munger believes success comes from understanding key ideas from multiple disciplines: economics, psychology, biology, etc. He uses a lattice work of mental models to analyze complex problems. For example, the concept of inversion. Most mistakes come from arrogance. Manish Pabrai uses checklists rigorously to avoid mistakes. Like a pilot before takeoff, he checks everything before making an investment. This helps eliminate emotion and increases consistency. Part 3. The Art of Patience. One of the most recurring themes in the book is the power of patience and how rare it is in the modern world. Joel Greenblatt and the long game Greenblatt crushed the market for years, but he emphasizes that most people can't handle the emotional turbulence of long-term investing. His magic formula strategy underperformed for years at a time, yet it beat the market over the long haul. The lesson: if you're not willing to be different, some of the best investors are willing to do nothing for long periods of time. As Charlie Munger says, the big money is not in the buying or the selling, but in the waiting. Patience isn't passive, it's active discipline. Compounding takes time. Nick Sleep, one of the quiet legends in the book, focused on businesses that could grow earnings over decades. His secret? Letting compounding do its magic. He avoided constant trading and just sat on great businesses for years. Part 4. Investing as a philosophy of life. What's fascinating is how these investors use investing principles in their broader lives. Value investing as a way of thinking. Not just in money, but in time, energy, and relationships. Avoiding lifestyle creep. Green highlights how some of these billionaires live surprisingly modest lives. They understand that more money doesn't always equal more happiness. True wealth is freedom, not being enslaved to a job or lifestyle you hate. The Inner Scorecard. Buffett and Munger talk about the inner scorecard, living by your own values, not by what others think. Many investors reject Wall Street's obsession with quarterly results and focus on long-term value, continual self-improvement. Nearly all the investors. Green interviews are obsessive learners. Tom Gaynor reads constantly. Munger devours books. Buffett spends most of his day reading. Success is cumulative, built through small improvements daily. Be ready to change your mind. Great investors are flexible thinkers. When facts change, they adapt. They don't get attached to ideas or positions. This humility protects them from ego-driven disasters. Behavioral edge over analytical edge. It's not the best spreadsheet that wins, it's the best psychology. Behavioral edge. Most people are their own worst enemy in markets. Emotions like fear, greed, and envy cloud judgment. If you can stay rational when others are panicking, you have a major edge. Margin of safety isn't just for stocks. Seth Klarman popularized the idea of margin of safety, buying assets well below their intrinsic value. This concept also applies to life. Don't overextend yourself. Leave room for error in your finances, career, and time commitments. Resisting herd mentality. Following the crowd is usually a losing strategy. The best opportunities lie where others aren't looking. That requires courage and the willingness to look foolish in the short term. Part 7. Legacy, Purpose, and Happiness. In the final chapters, Green explores what truly matters to these investing giants. Money as a tool, not a goal. Many great investors view money as a means to an end, not the end itself. True wealth is having control over your time. The happiest investors aren't the richest. They're the ones with purpose and autonomy. Service over self. One recurring theme is the importance of relationships. Buffett and Munger have been business partners and friends for over 60 years. No amount of financial success matters if your personal life is a wreck. How to become richer, wiser, and happier. So, what does it really take to become richer, wiser, and happier? Master your emotions. Think independently. Be obsessively curious. Play the long game. Focus on intrinsic value, not just in stocks, but in life. Avoid stupidity more than you chase brilliance. And finally, live by your own scorecard, not someone else's expectations. As William Green puts it, true wealth is about more than money. It's about freedom, integrity, and a life of meaning.